Well, every time when we have some Sanjeev Bikhchandani on ET now, I just struggle to find the right introduction. Some like to call him the father of Indian startup. Some like to call him the visionary of Indian startup. But it's the startup world, and the fashionable word to really describe a startup mentor is OG. So we'll introduce Sanjeev Bikhchandani as the OG of the startup. I think that's a good introduction to have. Makes you sound young and yet experienced.
When you say father and OG, it makes me actually very old. But thank you.
Thank you for joining us. Lot of excitement in the startup space. I mean, the startup space now is occupying the center stage now. From big deals to big valuations to startup companies going public, Zomato being part of the Sensex 30, a lot is happening there. Do you think in this year, which is 2025, the acceleration, the growth, the deal making and the excitement will continue?
So the deals were always happening. Valuations may have got a little muted, in the last couple of years after 2021, because the market had been overheated before that, frankly. But the deals were always happening. Maybe the round sizes are muted. Maybe investors are more discerning, slightly slower, slightly cautious. But all that is good, I think. It is good for a market to get some discipline.
Mr. Bikhchandani, the startup community, in a sense, has also got a lot of global and a lot of venture money. We are staring at outflows in the equity market. Do you think it's a matter of time they could also hit the private market, and especially global growth capital, which is coming in the startup route via the PE fund, via the capital market route, that also could take a hit?
So in general, private markets follow public markets when there's a correction by about lag of about 6 months, 9 months, right? In general. Having said that, if there is money that's committed to India private markets, that money will stay. It won't go away. It is the discretionary money, which can go private or public, which can go India or China, which can go India, other emerging markets. That is what may ebb and flow. So yes, it could happen, but there's some money that is committed and that will stay.
But you don't.
And that money is fairly substantial, the money that's committed.
So what's your sense? I mean, how much money could really come into the startup world or into the startup companies in this year?
I don't know the number, I can't predict it, but देखो last year कहते हैं कि $14 billion लगभग आया था, उससे पहले 11 था. So it's gone up by 3 billion. Prior to that, it was much higher in 2020, 21, 19, 20, 21. So will we go back to the 2020 days? I don't think so. But can it stay at this level or be marginally higher or lower? Answer is yes.
And again, just to get a follow-up question on that so that we don't get this one wrong. The reason why I asked you this question is that we've seen outflows in the public market. FIs have been selling. They were net sellers for entire 2024. They've been net selling in 2025. Do you see the reversal also could happen where companies which have gone public or investments where funds are closing down, the flows may actually go back?
It could happen in some cases. You see, if the public markets are correcting, and there are some stocks which may have gone public recently, which they may also see a correction. We have seen that happen. But having said that, understand one thing that I think somebody was giving me a number. I think more than 17 new age companies have gone public in the last 12 months. And that's quite remarkable because India is the only market in the world where this is happening. And therefore, it's actually a very good thing for Indian startups that investors and companies are getting public market exits.
Mr. Bikhchandani, it's a strange kind of a paradox if I look at the public market. Large cap stocks are trading at multiples which are lower than that of mid cap stocks. So can I say the same factor is at play in the startup world as well? That good companies and well-known, well-governed companies are trading at discounts, but smaller companies are trading at a premium in the startup world also?
So let me put it this way. Early stage startups are valued on promise and potential. They haven't delivered yet. Now, promise and potential could be anything. It's in the eye of the beholder. On the other hand, mature startups, they are valued on delivery. And so it's like this, yeah. In the long run, you will be valued of an earnings multiple in the public markets, right? And that's where large caps are. In the short run, you could be valued of potential growth, future promise. But your small cap and your trading volumes are low on a daily basis. Therefore, a little bit of investment can move the prices. So it's the imperfection of the market. So that is what I would say the situation is even in private markets.
So in the private market, Mr. Bikhchandani, where do you see a promise? Where do you see a potential? And I'll add one more term, where do you see a bubble?
Um, when a company is clearly not delivering, it's been trying for a while, but it's clearly not delivering. And there isn't a path to delivery or a clear path to delivery, but the valuations are still high. And their valuations are high because investors have gotten their high valuation and they're not allowing valuations to correct. That is where I think there's a bubble. Promise is in many early stage startups that are getting their first rounds, and we are part of it. We also fund companies in the first rounds, and we fund them because we see a promise.
Mr. Bikhchandani, I'll just like to remind our viewers here that Mr. Bikhchandani and his firm, when they started investing in the startup world, the startup word in a sense was an unknown word. Now it seems to be enjoying a mainstay. From public investors to sophisticated HNI investors, all of them are now investing in the in public companies now. So the reverse question, Mr. Bikhchandani, can I say that now, just like Indian public market are getting a lot of flows via the domestic investor, lot of startup companies in India could also start getting inflows from domestic investors, HNI investors, and ultra, big retail investors?
So domestic capital going into startups is increasing, but still 85-90% of risk capital in India is from overseas. And that is something the government is trying to correct, but we need to do more of it. They started the SIDBI Fund of Funds for Startups. I was in the first investment committee there. And I think they did a great job. 10,000 crores committed, 9,000 disbursed. It's a pretty good track record. The government needs to top it up, and I'm hoping that they top up in this budget.
Like we've seen a real emergence of what could be called as a cult culture in the SIP, which is systematic investment plan. What can be done for the startup companies so that the Indians can really take pride in the companies which in a sense could be the future big companies? I mean, what can be done to really replicate SIP in the private market?
SIP in private market is kind of hard. I do not know if there's an instrument available permitted by SEBI, but you can invest as an angel. You can invest in early stage venture capital firms. Now, typically, early stage venture capital firms are, CAT to AIF need a minimum size of 1 crore to get in. In an angel fund, it's lower. But you've got to be discerning and choose wisely. And, it's not for every retail investor.
Okay. What can be done on the taxation front? And you said that I hope we see some changes in the budget. So what is that you're hoping to see this budget?
One is I want to see top up in the SIDBI Fund of Funds, go into early stage venture capital firms. Second, we are hoping that the ESOP taxation gets more employee friendly. I think that's important. Right now, ESOPs are taxed on exercise and not on sale. So you have situations where employees pay tax right now with the exercise ESOP, but the stock is not liquid. They may have to sell 5 years later. Or the company may still go bust, but they paid the tax and that tax is gone. So that's a cash flow issue for employees. Third is I'm hoping that ESOP is allowed for independent directors. Startups find it hard to get good independence. They can't pay the salaries, the fees, and ESOP for independent directors used to be allowed till around 2010. Then it was removed. So I'm hoping that some incentives to get good independent directors for better governance are introduced.
Do you think the ease of doing business, while there is some progress on that, do you think a lot needs to be done and the startup world still feels that a lot needs to be achieved when it comes to ease of business?
I think that's for all businesses, not just startups. But yes, we need to make doing business simpler. You have to dismantle the Inspector Raj. And that is kind of hard because it goes down to states. Different states are different. It goes down to even district level officers. It goes down to multiple sort of compliance authorities. But yes, if we can dismantle or substantially simplify the Inspector Raj, I think it will go a long way in improving velocity of business.
Mr. Bikhchandani, startup by definition means high growth, low base, future ready, and a business which is built around technology. So if you have to identify, like you identified aggregation business in insurance sector, food delivery business when you identified Zomato, which to your mind are the high growth small areas which are small today, but potentially they could be large, big and mega in next 10 years?
So we see stuff bottom up. We meet 1,000 startups a quarter. We invest in 2 or 3. We do not sort of do it top down and say this sector is looking good, that sector is looking good. We just look at good companies, good founders, good entrepreneurs. But in general, one trend we see is that AI is going everywhere. So AI is something that is going everywhere, and it will have a huge impact on all companies, big, small, and startups.
Okay. There is a lot of excitement in what is happening in the quick commerce space as a consumer. It has changed our lives. But when something good happens and then something disruptive happens, what is good for consumer is never good for shareholders. So do you think we are going through that phase while quick commerce is a welcome move, but it could come at a cost where shareholders could suffer in the near term?
But first of all, let's understand quick commerce and e-commerce is only 4, 5, 6% of total commerce. Okay, so it's still small. Second, and it's growing fast though. Second, we are hoping for rational behavior by all players, which basically means you're pricing at a point where you are making a positive margin and a profit. If money becomes very easily available, founders can often get, commercially imprudent. That's something we are hoping does not happen.
So will it be like winner takes it all kind of a situation in the quick commerce business also? What started as an idea, now there are dozen of players who are there in the quick commerce space. Do you think sooner than later it could be a marked distinction there and the survivor and the winner will take it all?
I don't think so. I don't think quick commerce is going to take all market. I think there'll be many players. I think there'll be niches, there'll be geographical niches, there'll be product-wise niches. There will be, there will be whole areas which will have different players. So I don't think it's a winner take all market. I think many will survive, many will thrive. It's a question of market maturity.
Just like in the food delivery business, Mr. Bikhchandani, it's just a two-player market. The term to use to explain it to our viewers is oligopoly. You don't see the quick commerce space becoming an oligopoly market. Do you think there could be multiple players here? Can I say that?
Yes, absolutely.
But why do you say that, sir?
See, what are the kind of businesses that become monopolies or oligopolies, right? Either there's a government mandate, or you're controlling a strategic resource, or there's a massive network effect. Otherwise, natural monopolies are hard to find.
Where do you think quick commerce may not work? For example, it has worked brilliantly in groceries. It has worked brilliantly when it comes to, if you are trying to identify a solution to beat the traffic and convenience. Do you think this entire extension of quick commerce where you're getting apparel, refrigerators, laptops, and even laptops delivered, do you think that's not going to sustain?
No. It might sustain. All I'm saying is that there will be many players, and offline will still remain a larger chunk of it. See, there are many Indias, and all Indias will coexist.
But do you see quick commerce also becoming successful in tier 2 cities where the consumer is still very conscious? 40 rupees delivery charge may not be something they really would like to pay for.
So that's an experiment that's happening. We will wait and watch and see what happens. But in general, if you're offering value, you can charge for it.
Mr. Bikhchandani, when it comes to the success, Zomato has been a success. Policy Bazaar has been a success. And I'm just going to take it from where we left last time when we met in IEC. While it looks easy, it's actually very difficult. So what is the difficult part for the startup world right now? And if you have to really, indicate some templates to our viewers, because this conversation I'm sure would be watched by a lot of entrepreneurs, a lot of startup founders who want to perhaps learn from your wisdom.
So look, there are a few thumb rules, but each business is very specific, and you've got to do what it takes for your customer, your market. to succeed. But in general, I have always said that the customer's money is better than the investor's money. And if you're making money from the customer, I think you have a good template for success. Which basically means that customer, ग्राहक आपको पैसे दे रहा है, जो पैसे दे रहा है वो आपके, it's more than your expense or more than your cost, and therefore you're making a positive margin, and the customer is coming back repeatedly. That tells you that you've got something valuable there which the customer wants, and keep at it. So focus on the customer money more than the investor's money.
Mr. Bikhchandani, a question I've always been meaning to ask you is that if I look at the big picture in India, India is still a credit-starved country. And credit penetration is low, leverage penetration is low, and fintechs are getting incubated, almost on a daily basis, good fintechs. But as a firm, InfoEdge has never had big investments in the fintech world or companies which give loan or have some technology in terms of providing easy credit. Why is that?
We've got one or two or three, but in general, see, number one, we believe in businesses that create IP. We believe in businesses that have a network effect. We believe in businesses that are capital efficient and are not cash consumptive, because we don't have that much cash. We are a small fund and we are a small balance sheet in comparison to some of the giants who are investing. We're not a soft bank. And lending businesses require a big balance sheet, or tying up with somebody with a big balance sheet and giving FLDG. And we're not sure we understand lending that well. पैसा lend करना आसान है, पैसा collect करना मुश्किल है, उतना आसान नहीं है. And lending is a collections business, not a lending business. And जब तक आपको वसूली नहीं आती, आपको lending business पे नहीं जाना चाहिए.
That's a great point, and something which I've certainly learned over the years by interacting with Mr. Bikhchandani, that it is important that you should understand देना बहुत easy है, लेना इंडिया में बहुत मुश्किल है, and that should be the structure of any fintech startup. Mr. Bikhchandani, just to get back to your two mega investments, and I'm going to phrase them indirectly. I respect the fact that they're listed companies now, and there would be limitations in terms of what you can share and what you would like to share. But in general, last time when we met, you said that PB Fintech and Zomato are high growth companies. Can I say that their view is still intact and they are still in the early stage of their high growth? The base may have become big, the market cap have become big, but PB Fintech and Zomato in your book for next 3 to 5 years will still remain as high growth companies?
That's our belief, and it is borne out by data thus far. I won't say early stage of growth. They have already grown for 10 years, 15 years, but they continue to grow fast, and that's good.
You find that for InfoEdge? Is InfoEdge at aggregate level still in a high stage of its growth, or it is reaching that mature curve now?
देखिए, in jobs and Naukri, we have seen a moderation in growth the last 2-3 years, and that's largely because demand for Indian professionals in IT had slowed down. That is now picking up. We are seeing growth come back to moderate levels from slow growth. Let's see how it goes next 2-3 quarters, but we are hopeful.
Before I wrap, everyone I've interacted with in last 3 or 4 days had the following thing to say. Either they have gone to Kumbh, or they went for the Coldplay concert, or they ran for the Mumbai Marathon. Where did you go? Kumbh, Mumbai Marathon, or Coldplay?
None of the above. I'm working on with DPIIT. There's a whole team working on the startup Mahakumbh, which is happening in April.
So it's not. So it is not the Mahakumbh. It is a startup Mahakumbh, but Kumbh nevertheless when it comes to you.
Absolutely.
Appreciate your time, sir. Thank you very much for joining us, and best wishes for a great 2025.
Thank you. Thank you.
If you like this video, then like, share and subscribe to ET Now.